Hello and welcome, I'm James Palla. Welcome to my wine investment market update for April 2019. I hope this gives you a better understanding of the current position of the fine wine market. There's been some exciting developments in the wine market, a very interesting turn of events for us investors. This month's valuations, the prices were up for February versus March with a total gain for the month of 0.6%. Rhone Valley and Champagnes went down 0.5%, but the Bordeaux wines went up 0.7%. And because we give more recommendations in Bordeaux, our overall gain was up. But in the details of these valuations, 26% of them went up, yet 41% of them dropped, and the rest didn't move at all. On average, merchants have lowered their prices around 5 to 10%. Since there is anxiety in Europe over Brexit, trading activity in general is slower than usual, less buying but also less selling. Investors are holding and not looking to offload. I mean, why should we offload, since the situation with Brexit is very much political, which has become apparent over the past few months. The problem with Brexit is the politics, not the actual turn of events. Merchants are willing to lower their prices to remain active in selling their inventories, and this presents a huge opportunity to us because merchants hold stock unlike investors. Merchants need to move their stocks regularly. They can't afford to keep their stocks on shelves too long, therefore lower prices when activity is down to ensure that they keep inventory rolling. The bottom line with merchants is they need to continue to generate sales, so they lower their prices because they're forced to reduce their margins. It's very good news for us. These are my recommendations from 2016, which is 2.5 years of investment. It's not the full period of investment, as I always advise to hold for at least 3 to 5 years, and longer if you can, but this gives you an idea of how our recommendations are performing. From 50 wines that I recommended in 2016, there are 2 that are unchanged, and 48 that are showing a positive gain. I often recommend a wine more than once, and in this year, there were several occasions when I recommended a wine more than once. The lowest gain is Chateau Orson, vintage 2007, with a 2.43% growth. The highest gain is Chateau Mouton Rothschild, 2003, with a 44.29% growth, and the average annual return across all the wines is 11.97%. We don't need to worry about holding on to stock because that's what we do anyway as investors. We don't look at short-term gains, we usually keep the wine, as I mentioned, for at least 3 years. If we make a big return in less than that, then of course we will sell, but unlike merchants, we have the advantage, so we buy when they're willing to reduce their prices. Typically this is the time to go in big. It's the reverse of what the market is actually doing. With a situation like Brexit, it's not a major issue for the wine investment market, only the currency is what affects us because of the fluctuation in pound and euros, but most of that downturn in the currency has already been factored in anyway. Try to take advantage of the low prices available this quarter. If you're in a position to build your portfolio, the timing is perfect for you to make some fantastic long-term gains when Brexit has finally resolved itself. 2 years from now, if you don't buy anything for your wine portfolio, you'll be kicking yourself. The stock market has been rising substantially for the last 2 years. How much higher will it go? There could be a drop in stocks in the next 1 to 2 years. At this point, I expect fine wine to boom again. The media are portraying that the UK and Europe will fall apart after Brexit. It is likely there will be some delays in reorganising the breakup of a long-term partnership with the EU and the UK. However, the leaving without a deal rhetoric is coming from the media is rather fake. Since 2018, Dominic Raab, the Brexit Secretary, announced Brexit no-deal plans in the event the UK left with the EU without a deal. The EU have also confirmed they have made contingency plans a year ago in the event of a no-deal Brexit. It was announced that the US do not plan to increase interest rates, a plan most likely Washington set up to ensure that the economy and stock market remains robust throughout the election. We have seen super growth in the fine wine market since 2016, and the prices, despite being slow in the last few months, have shown solid growth. My aim is always to try to achieve capital protection for your investment. If we can beat inflation and money in a savings account, yet still buy the safest fine wine investments, such as First Growth Bordeaux wines, then we are achieving success. This has been the result of my recommendations over the last 18 years, as you can see from our track record. That's it. Thank you for watching.